Yeah. Yeah.
Okay, so let's go over the plays that we did from. I'm just gonna show you guys the plays that I did for Monday, Tuesday. What's today? Wednesday or Thursday? It's Wednesday, huh? Okay. All right, so let's look at when was the last time we had class? Monday? Okay. Monday. Okay, look, so on Monday, did I break down the plays for Monday? I did, huh? I already broke that down on Monday. Right? I don't need to go over that. Okay, let's go over the swings. Oh, yeah. The swings from Monday, okay? I didn't go over that. On Monday, I put Bank of America calls to swing, and then Boeing calls to swing, and Home Depot calls to swing. So this is all the overnight swings that we had to hold until Tuesday, right? Now, what was it? Bank of America? Okay. This is Monday. Okay. This is Monday. This is Tuesday. And this was today. Okay. Monday. So on Monday, I signaled whatever Bank of America calls the swing. So this is Bank of America. So let me do some stuff real quick. Let's see the time. 12:52. So right before the market kind of ended. All right. Around here, 12:52 here. So my idea, right? Why I decided to can't hear anything. Can you guys all hear me? You guys can all hear me, right? All right, Tien. I mean, unmute me or something, so that everybody can hear me. But look, this is my thought process, right? There's a range, right? There was a range that happened on Bank of America. Okay, I saw this range coming because, first of all, pre-market, right? You guys see this pre-market area right here? That's you want to look at that. Okay, you always want to make the pre-market resistance or pre-market support lines whenever you see them. Okay. Now, what is it called? I didn't want to day trade Bank of America because I didn't feel like it was going to move too much because it usually doesn't. But swinging it was pretty. It was kind of worth it, right? So, how do I take this off? All right. So it was in that range, even pre-market, right? You guys see this range? You guys know what a range is, right? When stocks, it goes up and down, and then it creates that range, right? It can't break that resistance or it can't break the support, so it kind of bounces back and forth into a range. So this is the high of the range. I'm talking about the pre-market range. Okay, I'm not getting into the market yet. Pre-market range. Okay, that's the pre-market range. So technically, okay, if you guys want to day trade this, or if you guys wanted to, because it already happened, or if you see something like this tomorrow or the next day, and you see that a stock is in a range, right, pre-market, you can make the support line here, you can make that as an entry for what? Entry for puts, right? Because it broke that support line if it was to break, right? If it was to break. Now, once it breaks the top range, what is that? Calls, right? So that would be the calls. Okay. That's only if you wanted to get into this like right after the market opens. Okay, depends, because you can always take different approaches. Like every single day, you know, you can't. In my opinion, right, there's so many different approaches you can take to the market. You know, one approach might work today, tomorrow it won't work. So you got to kind of know all these things so that you know what to choose from. So you're like, all right, so I might not be able to go aggressive on this, like right now during this, you know, hour, but I can go light and see if this breaks. Well, that's just the thought behind it, right? So before we get into why I swung it, this was technically a good entry for day trades, right? Because first of all, right, it broke that thing right here. It broke that line, but you would not know where the profit target was, okay? Because this hasn't happened yet. So as you enter here, right, this is a way for you to kind of gauge where you should take profits to. Because look, okay, if you were to look at it like this, like frame by frame, right? Let's say you're looking at a 1 minute, for example. Let's just take it to the 1 minute. Okay. Let me see. 5 days, 1 minute. Yeah, I'm gonna show you guys what I do. What I do to take profits if I don't know where the next profit target or resistance is, right? So, what is this first of all? Before we even do all that, what do you guys already see on the 1 minute chart? What is this? What is this right here? This is such a good pattern, right? You guys see this pattern, right? This is a triangle. Okay. Now, why is this triangle such a good triangle? Can anybody tell me why this triangle? And I'm going to show you why it's a triangle. It's a good triangle, right? Because, okay, because it's right about to be at the resistance level. Does that make sense? When a triangle happens, right where the line is, where the resistance line is, where your entry is, right? You're not the only one, right? You are not the only one who sees this, are you? Right? Everybody else that's trading this stock knows where that resistance is for the most part, right? If people know how to trade, more than likely people know how to chart by now, right? So they're like, oh, okay, this would be the entry level. So you're not the only one looking at this, right? So that's why it makes a good pattern, because it's showing you, right? A triangle is literally showing you that buyers are trying to push it up while sellers are trying to push it down. But as time goes by, the buyers are slowly pushing the price up so that it can eventually, right, squeeze in the end of the triangle and break out. That's literally what the triangle is, right? So now as it's breaking out, right, do you want to wait for the do you want to get in as soon as it breaks the triangle, or do you want to get in after it breaks that resistance line and closes above the resistance line? After, right? You want to know, you want to see if the price actually holds, right? Because this line right here, what is this line? What does the resistance literally mean? What do resistances mean if you were to break it down when it comes to like supply and demand, right? This means that this level is a level where people are looking to sell, right? That's where sellers are sitting at. So just imagine, right? When you're looking at a resistance, right? Just imagine somebody, right? Just imagine a big guy just sitting there, right? This is the seller. Okay, that's a seller. Whatever. I can't draw for shit. But just imagine there's a big bad seller right at the top. Okay, that's what you always want to picture this as, right? So you don't immediately want to just get in like just because it broke that triangle, because for all you know, right? For all you know, this could have ended badly. Okay, this could have rejected this line and then it could have just tanked. Okay, that's why you always wait for confirmation. That's when like volume 2 comes into play. If there's a high volume, especially as it's breaking, then yes, that's also a good indication as to why you should get in that trade, right? So just showing you, if you were to day trade this, this would have been a good play too, right? And if you want to know where the profit target is, but you don't, because you guys know, right? When you want to make a profit target, right? If you want to make a profit target, what does the profit target have to be? The profit target has to be where the next resistance is, right? That's the only way you would know where to take profits, is where the next resistance is, meaning where the next area of sellers are sitting at, right? Just imagine your chart as a big building, right? There's levels to it, right? There's floors. Once you pass the first floor, right? Someone's sitting on the second floor, right? There's a big fat guy sitting on the second floor. So what you have to do is, the fatter that guy is, right, the more people you have to bring with you to push that door so that you can literally stomp on that fat guy and just keep going up the levels, right? Just imagine, right? Your first resistance is going to be just a mini fat guy, and then the resistance is going to be a heavier fat guy, and then the third resistance, an even heavier fat guy, right? And then the next resistance, a fucking sumo wrestler, right? As you get higher and higher and higher, right? As you get higher and higher and higher, it's gonna be harder. Listen, you guys listen. It's funny, but you guys need to listen, right? It's gonna be harder for you to get up the level, right? Because everyone with you has been pushing through the levels and they're getting fucking tired, right? Right? As you get to like the second, third resistance and it breaks, all your homies get tired. Okay, they need energy. Either they need more energy, or you need to call up more homies to help you push through the level, through the floor, through the door, right? Does that make sense? That's just the most simple way to explain what resistance is and how you can gauge. Like, for example, if you've already crossed 3-4 resistances and the stock's already moved like $7, you think it's gonna keep going another 10? It's gonna be harder, right? There's gonna have to be more buyers, right? And you don't know if the people who bought with you are gonna sell, right? You don't know if your homies are gonna start and just gonna give up and just go home, right? Because when that happens, right, the price starts going down, right? What form, besides waiting for the next candle to form, what is another good way to avoid fake outs? Low volume, right? Low volume is a good way to avoid a fake out. If there's a green candle, if there's a big green candle and it doesn't have a lot of volume, then it might be a fake out. Like, for example, look at this candle, okay? Look at this candle. Just look, right? Before you guys ask questions, just look. Okay, look at the volume here. Okay, look at that volume. And then look at this candle. You would think it's going to keep pushing up, but it didn't, right? But because look at the volume. Is the volume less than what it was over here, or is it more than what it was over here? It's less. You guys see how it's less? Okay, does that answer your question? That's another thing you can look for when it comes to whether you should get in or not. There's going to be, like I said before in the example, right? The higher the level, the heavier the seller, and the more buyers there has to be, right? Because what happens is, right, this is what happens when you see the stocks move, right? It goes up, this, then like that, like this, and then like that, like this, that, this. So it doesn't just go like, straight up, right? It goes like this. So you have people buying. For example, if you were to use the example I use, the elevator, I mean the building thing, right? You have your friends with you pushing through the door, and then the fat guy, and then they gotta rest, right? You guys have to rest, so you rest. Boom, you rest, and then you go at it again. You rest. You go at it again. You rest. You go at it again. You rest. Right? You don't just go straight up, right? You don't just go straight up, because there's always people that are gonna sell their positions, right? Not everybody's greedy as fuck. Okay. Not everybody's greedy. When you're in at that point, is that a good indicator of a reversal? I mean, I just told you that there's low volume, right? There is low volume. and it's at the next resistance, right? This would make it the next resistance, okay? And then it's reversing, the volume's turning red. Why would you stay in the trade? Because you're greedy, right? Because you're greedy because it's already up. Bank of America only moves about $1, and it's already up $1.50 at this point. And it's like, you want to keep holding it, right? Does that make sense? I'll go over the swing, how I swung it. So going back to the 5 minutes, right? So I hope that helped you guys with the pre-market range. And then if you wanted to get in a trade right after the pre-market happens. Now, this is what happened, okay? You see how we created this high, okay? It created this high, so I made that line, okay? And it made that line, and as the day grew, and as the day went on, right? As soon as it hit like 12:30, we were watching this push up, okay? We were watching this push up, and I called it around 12:50 to swing Boeing, Bank of America calls, because look at the volume it had right before it sold off, right? Look at the volume it had right before it sold off. That's what I was looking at, right? So I signaled it, and then it went up what? $2 after hours. That's a lot for a $2 move on Bank of America is like a $30 move on Amazon. First of all. Now that I went over that one, let's look at Boeing in HD. Okay. Boeing in HD. I don't like trading pullbacks, reversals. Ben Peterson asked if would you enter puts at the top before resistance for possible pullback, or is that just a gamble? Okay, so in my opinion, when that happens, I would rather trade breakouts than guessing whether it's going to reverse or not. Because yes, you're guessing. You're like, okay, this is the resistance, so it's gonna pull back. Now, unless the stock's been up, like, just like I said, if it already broke that average range, if it broke the average range in the day, and you're looking for a reversal, is the stock gonna be? Is it gonna be a more probable trade if you went and traded puts for the reversal or calls for the breakout, if it's already broken out of that average range for the day? Puts. That's the only time you should look to enter puts before the resistance hits, only if it's already past its true range. Like, because sometimes if it hasn't passed its true range, it's just gonna fake you out. You're thinking it's gonna reverse, and that shit just shoots up like $5 right in front of your eyes, and then you're fucked. Right? Kevin, what happened to ZM today at the end of the day with that dump? I have no idea. I mean, I don't like. You guys know? Have you guys even read the news on ZM on Zoom? Who can tell me what happened to Zoom? If you've been doing your research. Boom. There's your answer. Security issues. You think universities want to fucking use Zoom right now? With the security issues? There's too many trolls. I've seen TikTok videos where they just crash a Zoom. They just crash a Zoom class for the fuck of it. Like, some guy was just showing his nipples on Zoom, and the professor was like, "Oh my gosh, I'm just gonna restart the Zoom." I was like, "Damn, people are really bored at home." But okay, HD. Okay, same thing with HD. I'll show you guys how I kind of called it out. Let's see. Let's go back to Tuesday, Monday, Tuesday. Okay, look. Okay, straight up, you can already see something. What was HD having throughout the whole day? What, it looks kind of sideways, but it followed a what? Boom, followed a trend, right? That's a nice little trend to follow, right? Nice little trend. Okay, and then looking at the 5 minute, what happened at 12:45? Look. Before you say anything, okay? Before you say anything, damn it, where the fuck is that page at? All right, before you say anything, now look at this. Look at the volume throughout the day. None, dead, little, nada. And then what happened at 12:45? volume just spiked up. Why? I don't know. But what I'm going to do is I'm going to take advantage of that spike. That's what I'm going to do. Right? And then it just fucking shot up after hours. Right? And I was also thinking, like, come on, Home Depot, everybody's going to Home Depot. Who's not going to Home Depot? Home Depot is pretty much packed nowadays. Due to this virus, everybody's at home trying to decorate their house, interior, exterior, whatever the fuck, buying wood, whatever, right? So it's an essential business, right? So that's when thinking about this is a good time to incorporate fundamentals during times of crisis, right? This can help you because now you're more your conscious is more at ease, right? Your conscious is more at ease because you're like, well, Home Depot's a good company anyway, so it's not like I'm trading fucking Apple, where no one can go to the Apple store. So that's also kind of my thought process during this uptrend too. I was like, I mean, this is a good company and it's a safe bet, right? That's why when I call things out, I had to think about it in a probability mindset, right? I have to think about probabilities because understand, right? The market, everything in the market, it's unpredictable. Okay, so it's unpredictable, but yet everybody, okay, just listen to this. Everybody who starts trading and starts to kind of get good at charts, what do they tend to do? What do people tend to do when they start thinking that they're really good at fucking charts? They're like, I can. They try to predict, right? They're trying to predict, and they think they can call shit out. They're too confident. They're so certain, but in literally, right? Literally, when it comes to trading, right? Learning this, right, is just like fucking 20-30% of it. Everything else is what's going on inside of your head, believe it or not, right? It's literally it, because sometimes you'll be like, you get into a trade and you're like, oh, I should have got in earlier, I should have done this, I should have done that, right? What you want to do is you want to get to a point where it's like you don't think about that anymore, right? You never, after you make a trade, you're not like, oh, I should have did this, should have did that. There's no more I should have, could have, done it, right? Because you executed. That's all that matters, right? As long as what it works, right? Just keep doing it, right? So look, saw this uptrend, and then guess what? That shit gapped up fucking 191 to 199. Oh, no, I'm sorry, 191 to 204. So everyone in the group caught that. Like, that was crazy. Like, yesterday was one of the craziest days that we've had because so many people made money. I couldn't even screenshot all of it. I just fucking made a video about it. But Boeing, let's look at Boeing. Okay. Boeing went crazy too. So look, call out Boeing first swing. You see, okay, why do I say high risk? Okay. Why do you guys think I said high risk for Boeing? Just putting that out there. Why is Boeing a high risk stock to go up right now? Yeah, it's an airline, right? We don't know if it's going to go up, right? They're not making any money. They're making, how much money do you think Boeing is making right now compared to how much they were making 4 months ago? They literally are not making that much money now, right? They're losing money. Okay, look, their revenue is down 90%, right? And they are getting fed money, right? But it doesn't, just because they're getting fed money doesn't mean that you just get in just because they're getting fed money, right? But looking at the price action today, I mean on Monday, just like how I showed you on HD, what did it have towards the end of the day? It had a volume spike. Okay, it had that nice little volume spike. These are the types of levels that you guys want to have on your chart, by the way. You guys see how it kind of suits everything nicely? Like here, break above this, profit target here, hit, and then here, profit target hit. You guys get that? Like how your resistance and support lines are supposed to look like this, so that you so that you have a better idea of when to get in, when to get out. This, so you're not like, oh, I'm gonna take profits, fucking 10 and another $10. Like, come on, right? Sometimes, if you don't have these lines, you just become delusional, right? So this was why I kind of traded, kind of called out Boeing. I don't know if you got to answer my question because I was up, but why is that some companies have an increase in volume and they make a clean break over the resistance on the 5-minute chart, and you enter and then it just does the exact opposite? I mean, it happens, right? It happens. You got like nothing in this market is guaranteed until you understand this, just that simple fact that nothing in the market, you have to be certain about uncertainty. Does that make sense? You have to be certain that there is a lot of uncertainty in the market instead of being certain that there is no uncertainty, right? You have to get to the point where it's like, it's just a probability game. If it doesn't go up, it doesn't go up. That's it, right? It doesn't go up, it doesn't go up. Don't beat yourself up. Don't think that your analysis is wrong just because it didn't go up. Like, right? You never know. What if it was supposed to go up and then you have some fucking asshole CEO who bought in $1 billion worth of puts? Now what? You don't know why he did that. So whose fault is that? Right? The whole Wall Street's going crazy over calls, and then you have fucking one Saudi Arabian fuck putting in all his wealth into puts, and then now the market goes down. Right? It's uncertain. You never know what's gonna happen. Okay? You never know. Right? If somebody important dies that has something to do with Wall Street or CEO or whatever, it's unpredictable. Nothing is certain. Just execute. That's it. That's all you have to do. Like, don't overcomplicate this. And for those who don't believe me, like, you're gonna know. Like, if you don't heed what I say, you're gonna find out. Give it like 3 months, give it 2 months, 3 months, 4 months, you're gonna blow your shit up. And then you're gonna come back and be like, you were right. I thought it was gonna go up, but it didn't go up. I was wrong. Brother, there goes your money, man. There goes your money. Not my fault. Right? If it was easier, yeah, if it was easy, if it was easy, everybody would be doing it. That's the thing. And if it was easy, everybody would be making money every day. I mean, although my group, we make money every day, it's not easy. It's hard. It's stressful. You know how much I stress during the day trying to get in something or signaling something, because I'm literally telling hundreds of people I'm getting into this, and then they're gonna probably get into it. So I kind of feel responsible sometimes if the call's not right? So that's why I take my time to make sure everything I say makes sense, right? I don't just fucking throw shit out like fucking, oh, Facebook calls, Amazon calls, Apple calls, AMD calls. You got some people in different groups. They're like, calls on everything. And then, and gosh, this shit's so fucking funny. But look, okay, that's why. Do you guys understand why I swung? Why these lines are good for Boeing for anything, right? For anything, you want to have these lines. This is nice because it gives you kind of a lot of room for each levels, right? It could have been better, but whatever. Now, why we swung it too was because of that volume at the end, okay? And everything else in the market was already pushing up, right? Everything else in the market was already pushing up. So basically, right, it would make sense for this to go up.
My headphones are almost out of battery. Sorry.
But look, right? Don't trade it. Don't look at level 2. Why is everyone so stuck on level 2? Like level 2 this, level 2 that, level 2, level 2, level 3, level 4, level 9. Yeah, level 2 is good, right? It's not like fuck. Like everyone is so stuck on level 2. It's like, do you look at level 2? Oh my gosh. Okay, look. If you have a lot of money, then yeah, you want to use that 1 minute chart and look at the level 2. But if you're trading with hundreds of dollars, like, come on. Level 2 is for scalping. Level 2 is for the big guys, okay? Because level 2 it literally tells you real time what everybody's buying, right? But it's just like bam, 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 bam. You see fucking 100 orders in 2 seconds, right? You see a flash of green. Now you see a flash of red. You're like, what the fuck? I thought it was green, but now it's red, right? Oh gosh, see where you guys started with level 2? Now I gotta explain the whole level 2 thing. People. Can anyone tell me what level 2 is?
Can you hear me?
Yes.
Level 2 is pretty much like a bids, like buyers and sellers of different markets are bidding against each other. So you see the actual bid.
Exactly. You see where you see what people are buying in real time, and like literally, if there's 1,000 people that are buying orders right then and there, you'll see that whole thing just flash right before your eyes. It sounds intriguing, but when you fucking look at it, it's like a damn headache. Just look at it tomorrow. Go on, take a swim. Go on level 2 right here where it says level 2, and it'll show you the whole fucking thing and time and sales. Okay. I can't show you right now because the market's not open. Yeah, it's like a mini war. You know, it's literally like a mini war. The only time, okay, now I can tell you this, right? Because I've used it before. But I don't sit in front of my computer anymore because I'm not scalping right now. But what you want to do is you want to look at level 2 when it's at what? When is the best time to look at a level 2?
When it reaches gets to a close, I would say look at level 2 when it gets to a level that you have established or key
exactly.
level.
So look at this, right? So look, imagine this level, okay? Okay, don't look at the left. Just look at what I'm circling right now. Look at this. If you were to look at a level 2 right here, right, this would be the perfect time because you're looking to enter at the resistance, at the break of this, right? So you want to see, right? You want to see the timing sales, right? You want to see the bids that are above this, right? Above this price, right? When you start seeing those, it's like it'll tell you like, oh, okay, so people are willing to buy above 149.33. So now you get in, boom, right? That's a good way to use level 2, in my opinion, right? Does that make sense?
Yes.
Okay. What else? There another one? Okay, so I already went over HD, Bank of America. Okay. Today we traded Facebook, Boeing, Roku. Let me see. And Boeing calls 825. Okay. So we're gonna go over some day trading stuff. Okay. We rode Boeing for like 5-10 minutes. It was kind of nice. So first of all, right, what you want to always do, right, is let me take this out because this is looking weird. But you always want to establish your support resistance, right? Now look, okay, pretend I don't have any of these yet, okay? Right? So let's say it's pre-market right now, okay? Where's my support at? Does anyone know where my support is at? It's right here. That's when you make it support, okay? 140.18, right? Why? Why do I make the support there? Because on Monday, wait, is it Tuesday or Monday? Oh, I'm sorry. Yeah, on Tuesday, it created what? A bottom here, right? This was the very bottom of Tuesday, right? So it made that line and then it followed it. It literally followed it throughout the whole pre-market right here, right? I mean, after hours. Is that a good sign when it follows that support and it doesn't break below it? Is that a good sign that's telling you like, hey, there are people who are willing to buy this at this price. So you want to look to see if you can wait until this thing goes higher and break that pre-market resistance so that it can go up, because buyers are sitting at this level clearly, right? Yeah, I'm on the 5-day, 5-minute. I'm on the 5-minute chart in general. Okay. Now you want to make your support resistances for the pre-market. Okay. This was one. And then what is this right here? What did this create? Range, right? Good. This is a range. Okay. This is a range, right? Now let me see. Here's the thing. Here's one thing I'm going to mention. Okay. When you're trading like right after pre-market, sometimes it's kind of hard, right? Sometimes it's kind of hard. It's like sometimes you get in too late, or sometimes what happens is you are not satisfied with what you made, right? So you try to make more. That always happens, right? People will get in with like $100, $200. They'll make $50, but they want like fucking, $300 for the day, 400, not realizing that $50 on a $100 trade is already 50%, right? Do you set pre-market high? Yeah. So this is a range. This is the pre-market high. Okay, that's the pre-market high. Right now, this is a perfect opportunity just right here, right? How many dollars did this move just from this breakout right here to the upside? $3 move, right? What did it create on the 1 minute? That's a bull flag. That's a bull flag. Okay, create a bull flag on the 1 minute, and then it broke out of the bull flag. Okay, it broke out of the bull flag, went back into the range, but look before look before it broke out of the bull flag, right? What did it show here? Okay, this is a support again. Okay, support. Now you have buyers, right? That candle is showing you that there's buyers and they're holding the support, right? So when everybody else is looking at this, they see this bull flag, they're just gonna follow along, right? They followed along, and look where it went, right? It literally went from 146 all the way to 151 in a matter of 1, 2, 3, 4, 5. Yeah, 5 minutes, and then it went up another dollar a little bit, right? In 5 minutes, that's a good 5-minute trade. That's like a 200% trade in 5 minutes. That's why it's important, right? If you want to get into trades, and when the morning started, right, you got to be quick. You can't be spending fucking 2 minutes on looking for a fucking contract. Look, this is a 5-minute move. Okay, that's what you're looking to get into this, but you're too busy. You're too busy asking people in the chat room saying, "Hey, which contract should I buy? Hey, is it too late to get in Boeing? Hey, should I go at the money, in the money, or out of the money?" Right? How long do you think it's gonna take you to go through this whole thought process? Maybe 3 minutes, 4 minutes, 5 minutes, and yeah, 5 minutes are already gone from you asking and not executing. And then what happens? You get in after 5 minutes. What happens? It's not even FOMO. It's the fact that you lack the execution part of this whole thing. That's what you lack. That's the whole thing. It's not that you have FOMO. It's that you refuse to learn this shit yourself. So you rely on other people to make your judgment call for you. And then what happens? You're fucked. You get fucked. But if you just listen, for example, if we called it out here, whatever, and then people are asking, oh, why, right? Because they don't know what we're looking at, right? Or if you saw this yourself and you're able to execute here and not worry whether it's going to go down or go up, but just go with your gut and know that you executed and just waited, boom, you would have had 200% at the top, right? Even if it broke this, like if you made this your entry, right? You made this your entry, okay? Even if you get in at the top here, or even here, right? It's see how some of you are like asking this, asking that. That's literally what people do as the move is happening, and then they miss out on this shit, right? That's why I backtest a lot. I used to backtest a fucking lot. I used to practice this using the on-demand feature on Thinkorswim, so that I don't have to hesitate the next time I get into a trade, because that was my problem back then. I was fucking, I was like, fuck, should I do this? Should I get into that one? Should I get it now? And then by the time by the time I decided to get in, it's already made a big move. I'm like, fuck, right?
So, for example, in this situation, would you have just picked something in the money within your budget, right about maybe what is it, 149, 150?
Yeah, if you're that would have made you bank, but right, because right now we're talking at it in hindsight, right? Because it's much more different when we're looking at it in real time, because then the pressure's there, right? But yeah, speaking on it in hindsight, you could have made a lot more in the money, but will you be comfortable risking that price, right? Because what trading is, it's a probability game. So when you're trading in probabilities, you have to accept what? What do you guys have to accept when you're trading in probabilities?
Could be wrong.
Risk. You have to accept the risk. When you accept the risk is when you're gonna trade so much better when you accept the risk. Because what you're doing is you're accepting that you're putting down $200, right? And you're looking at the risk to reward, and you're hoping or you're looking for it to go up $1 or $2. Boom, right? You're accepting the risk. Because what happens when you don't accept the risk?
You get stuck trying to
You
ask
get
questions.
stuck, you get emotional, that you lose more. It's not even the fact you lose more. Even if you made money on that day, if you still are not able to accept risk and what it is, you're gonna fuck yourself over, right? I don't care how much analysis you know. If you can't fucking risk shit, then you're not gonna make shit. That's it, right? Why do you get into trading if you don't want to risk your money, right? Some people come into this fucking game thinking it's easy. Some people think it's my bad. It's so fucking easy, right? It's not. It's simple, but it's difficult. It's simple but hard, right? Now, what were we looking at?
I got a question, Kevin.
Oh, calls. Sorry, what's up?
On
I
that,
wasn't even, huh?
go ahead. On that same Boeing you sold, when the very first candle, it looked like it had the same buying pressure. So would you got in the first candle, or you never get in on the first candle?
On the 1 minute?
Yeah.
On the bull flag? This one?
Yeah, the very first candle, it shows it like
Okay, that's a good question. So okay. There's gonna be more risk getting in here than getting in here. Does that make sense? Right? Even though you guys see this, so looking at this buying pressure, it's what we're doing right now, right? Because for the most part, we wouldn't get in during this candle, okay? We're looking at this in order for us to confirm that this can happen. So then we get in this one, right? But if you're a little ballsy and you see this buying pressure, of course you can take the trade, but you have to be able to accept the what?
The risk.
The risk. If you can accept the risks, take the fucking trade. Right? You see that it has buying pressure, especially I don't have the volume bar up right now, but especially if the volume's showing you that it's very high and then everything else in the market is green. What are you gonna most likely do? Well, no, are you gonna most likely make money if you get into this call? Yes, right? Probability. That's how you have to think, right? Now, some people like to have more confirmation than others, so they might get in here or even here, right? But if they get in here, yeah, they would have made more, but they're accepting that risk. That's why that's why they got in here and not here and here, because they are willing to accept this risk right here, getting in here, right? Because it wasn't a for sure thing this was gonna break. Because of why? Because of this resistance right here. So it's like, you know, if you really want to think of it like emotionally, psychologically, you could think like, you know, this might not break because there's a resistance here. But if you're just, you know, you're willing to accept that risk and you know there's buying pressure and there's volume and you're kind of confident in it, then yeah, take it, right? Just use a 15% stop loss and you're fine, right? Now, with Boeing, when I called it out today, it was at, what is it? 825, okay? 825 here, okay? So look at this, right? 825 was here. Why did I get into it here? Can anyone tell me one factor that you can already see right off the bat?
The candle open above that level.
Okay.
Lots of volume.
Lots of volume, huh? You guys see how this was the initial this was the initial candle that kind of helped Boeing go up today. Okay, so what happened was call it out here, right? But what was it in before that though? What made it such a good probability trade?
It was in a
Range.
range.
It was in a range. It
Range.
was literally fighting 149.80 and then fighting 148.90. So it was just going up a dollar, down a dollar, up a dollar, down a dollar, up a dollar, and then it was trying to break, right? And then look at this candle right here. What did this candle try to do? The red one. It tried to push it down, right? It tried to push it down, but look at this volume, okay? Look at this volume right here. What did this volume indicate? That there was a lot of buyers, right? So does that make sense as to why this resistance held? I mean, this resistance became support and held and not pushed back down. Does that make sense?
Yes.
Because of the previous volume on the previous candle, and now this held, right? Now this is buying territory, right? I was just waiting for a full candle to close above for confirmation. Then I called it out, right? Then I called it out. So we literally rode this from 150 all the way up to 150, 153, 154 almost. And then we took profits, right? People in my group, like today, let me see. Let me give you guys an example. Look where it hit, okay? It hit 154. Some people when it was like 3 minutes after this, right? It was like, oh, it's not gonna hit 154. Like it's not gonna hit 154. But they didn't see the fucking volume that it had. Right? Does that make sense? Okay. So does that clear up the Boeing day trade for today that I did? You guys know why I did it, right? All right. Now let's look at more stuff. Roku for today. Okay. Roku was break above 90.58. Okay. Where is Roku 90.58? Oh, right here. Sorry. Okay. What did I look at? What was my entry based off of? Does anyone know what my entry? No, not volume. Early morning high. That was my thought process. You see how on Roku and Boeing and HD I had different approaches. You guys remember how earlier like fucking 40 minutes ago when we first started this session, I was talking about taking different approaches to different days and different stocks, different time frames.
Yes.
So that's what I did for Roku. And Roku, I didn't really like look for a flag or anything. I just waited for it to break that high of the day, because this was the high of the day. And as it got closer, right, before this full green candle formed, it also had a what? Right before it formed. Because remember, this candle, if you look at it from a 1 minute candle, it literally was in this triangle, right? Then it just broke out. Okay? Does that make sense for Roku? You guys see this triangle? See how as it got towards the top of the triangle, towards the end, volume picked up, and then it broke this line. Okay? That was a nice $1.50. No, what is that? From 90.50 to 92-ish. So $1.50. That was a nice little. No, that was at $1.50. Yeah, that was $1.50. That was nice. We caught that. A triangle is bull flag. No, a triangle is not a bull flag. Did you read the did you watch the videos I showed you, I sent you guys for homework? So if you watch the videos, you wouldn't be asking these questions, by the way. Some of you. That's how I know you don't watch that shit.
I got a question for you.
What's up?
Since you don't have no profit target on Roku and you ain't scalping, how did you know when to sell? When did you?
50 cents, 50 cents to $1 increments on anything that you see that has no next resistance. That make sense?
Yeah.
I mean, you could have made profit target for Roku previous day high or this resistance line here, but you know, in my opinion, if you're going to get into a breakout that has no resistance, then just use 50 cents to $1 increments. This way you're not fucking delusional and saying it's gonna go up fucking $30, right? Or just, you know, what you can do is if you got into 5 contracts at the breakout and you're riding it to the top, what you can do is you can just scale out. You scale out and then hold on. Sorry. So you scale out because if you're already 5 contracts deep and you don't know when to take profits and you're up 30%, then yeah, take out, like what I do is I'll take out 3 and I'll leave 2 on there using the profits that I made, right? And then if I see that it's about to reverse and it starts gaining that volume, boom, get out, right? Let's look at Target. Look at Target today. Okay, Target today, 102.81. Okay, let me see the time on that. 8:06. I was waiting for 102.81. Okay. So I don't have the resistance lines made on the computer, but I have it on my phone. Okay. Why was 181 a good point for McDonald's? I'm sorry, Target.
Update.
This is the same, just like Roku today. It's the same shit I did for Roku, I did for McDonald's. Early morning high, right? Early morning high. Created that early morning high, couldn't break. It literally went down to what? The opening what? Support. Okay. You guys see how I had the line here, but it's look how many cents difference is this? It's a fucking it's an 18-cent difference, so it doesn't matter. Okay. So look, you guys see how it had that low of the day and then it has that high of the day. So it's a range, right? You guys see that drawing on the screen? I see it too. Some idiot is fucking on their phone drawing on this shit. That's why Zoom is so trash, because you can literally go on your phone right now, draw a happy face, and it'll show up on my screen. That's why I short Zoom till 0. But look, okay? You guys see how we created the range too, right? Just, just forget the blue marks. Just look at look at what I'm doing. Okay, high of the day, low of the day. And then here what? Well, what did it kind of try to reach again? The high of the day. It tried breaking that resistance, right? And then it broke. Does that make sense? So that was the level that I had set for target for buying calls. Boom. Okay. Now, look, let me tell you this. Okay. You see how it dipped here? What is a good stop loss? It went up because everything else went up today. And Target, remember, Target's open. Okay. Someone tell me what stores are open right the fuck now. That's open right now. That you can go to where there's a shitload of people in there.
Target.
Seven.
Walmart, Target, Home Depot, Costco,
Sugar Shack.
strip club. Strip club's not open. Sir Ponder a lot.
Dispensaries and cannabis.
Yeah. Weed shops are open. Right? So look, just like how I was talking about Home Depot earlier, this thing is an essential business. Everything else is going up, so why not get in? Right? But I'm talking about the stop loss here. You see how it dipped from 102.80 all the way to 102.20? So when you have a 15% stop loss, that's not going to break your stop loss. This would have been like a minus 5%. So there was no reason for anybody to kind of, cut this loss, right? Just wait, right? That's why, and that's why we say if you have weekends, you fucking get shaken out, right? How do you prevent yourself from having a weekend? By accepting risk. You accept the risk and you follow the plan. If you plan to cut the loss at 20% of your trade, then yeah, fucking cut it. That's it. That's all. Don't think about it anymore. Just cut it, move on to the next one. Right? Because the more you think about it, the more you're going to try to fucking justify it, rationalize it, whatever the fuck. And if it went up again, you're like, oh, I messed up. I cut my loss too early, right? But literally, you cut your loss at the right time because it's only down because it was down 30% when you cut the loss. So you didn't make a mistake. You did it right. You just what is it called? You just think you were wrong because the price went back up, right? But what if the price had went back down? Then you would have been like, oh, I did a good trade. I cut loss early, so it's good, right? The only reason why you think otherwise now is because the price went up. Just know that the market is unpredictable, so you have to be certain about uncertainty, okay? Let's look at more.
I got a question right quick.
So,
why is it that you I see you have the established pre-market low in which during a market it actually hit the pre-market low and it held it. Why do you wait for it to break the pre-market high and still you seen it hold the pre-market low and enter and then?
Because I was not watching Target like
okay.
Like I wasn't fucking sitting there like looking at this go up and down, right? I was just like I'd look at my phone and then because the market wasn't doing shit in the beginning, right? It wasn't doing much. You guys see how from 6:30 all the way to fucking like 7:50, almost 8 o'clock, it wasn't really doing much until it broke all the highs of the day. Does that make sense?
Yeah, I got you.
Because in my opinion, right? In my opinion, I don't like it when I have to trade a stock that already had a high of the day and then it dipped lower and now I have to try to catch the bounce back up. Because if it hasn't broken that high of the day, this is just my opinion, like that means the stock is still bearish in my opinion, right? Because haven't you guys seen cases where it's like this, like literally like the stock goes it creates that high of the day, and then it goes down, right? It goes down. Hold on. Sorry. It goes down, and then it has the support here, and then you want to try to catch it back up. But what happens sometimes? It'll just go back up a little bit, and then it'll go straight back down. What is that called? That's called a dead cat, right? It's called a dead cat. It's a dead cat bounce, right? Question. What if you enter a trade, it goes into you right away, and you hit your stop loss within a few seconds? What if you enter a trade and it goes against your stop loss within a few seconds? I'm just going to stop that sentence right there. What's the answer to that? What if you enter a trade and it goes against you right away and you hit your stop loss within a few seconds? Do you sell or do you hold it? You get out. That's it. You get out. Like, why are you trying to still sit there and fucking, justify why you should get out that time, right? If it bounces back up, it bounces back up. That's it. You can't predict it. What if it just went straight the fuck down, and you're over here thinking it's gonna bounce? Yeah, what happens then? Because he said He said, do you sell it right away or hold for a little longer? Because sometimes you catch a long red candle and it bounces back up. I don't know if you understand what I'm saying. Well, yes, I do understand, because because sometimes you catch a long red candle and it bounces back up. So what does that mean? That tells me that you're one of those people that like to hold their losses. That tells me that you've held a lot of fucking bags before. And you want me to tell you that it's okay for you to hold a bag. It's not okay to hold a fucking bag. Just as soon as it hits the stop loss, just cut it. Right? Cut it and then look to re-enter again. Right? It's a probability game. That's it. It's a probability game. Right? So let me go over more strategies, because I just went over the trades that we took today. Let's see. Okay. I'll pick a decent day. No, let's pick Apple do today. Okay. It's perfect. This is another one. Okay. What I want you guys to do a step-by-step with me on how to day trade this for the day. Okay. Hold on. Okay. Where is the first resistance line I should make? Or support? Doesn't matter.
Pre-market low.
So so remember. So if you were to divide this highlighted box right here into two parts, what is that? What is this and what is this side? So if I was to cut this half, I was to cut this in the middle. What is it?
After hours and pre-market.
So this is after hours. And this is pre-market, obviously, right? After hours, pre-market. So you want to make that after hour support, right? Right there. And then, right, obviously, you also want to have the previous day's support resistance lines down, right? So around here, and then you have one up here, and then you can make this one. This is a pretty good one. Why? 1, 2, 3, 4. Okay, whatever. That's cool. Right now you have these lines, but the day hasn't started yet. So what you want to do? You want to wait. You wait. You wait. Okay. Now you can make it here if you want. If you want to get really, really technical with it, make the line here. It's only a fucking 30-cent difference, but let's make it right there. Right. So where would your entry for calls be, and where would your entry for puts be, in your opinion?
Below the pre-market low. If it
Okay, look at this. Right? Now, is this a good area to make another support line here? Just don't look at the right side where it's already hit that part, but is this a good area to check whether you can make a line here or not? Okay, so now you have a what? What do you have now?
range.
Boom. You guys see how everything I'm doing is repetitive and it fucking works? Right? It's repetitive, but I want it to get through your head, right? So you see it too. The more you see it, the more it's repeated to you, the more you understand it, right? Boom, you got that range. So you would wait for 263, 60-ish to break, right? Now you're looking at the price action, looking at the price action, looking at the price action. What did it do here? So only look at support and resistance for the previous day when trading. Essentially, yeah, you look at that volume, but the thing is, this is why like, okay, professional traders, people that are good at trading, do they take a very simple approach, or are they fucking complicated and have all these different fucking shit on their charts?
Simple.
Why do they make it so? Why is it simple like this? Like how we're looking at it?
Makes it easier.
It makes everything easier. There's no noise. You're literally looking at straight price action. You're not relying on your little fucking RSIs, on your little MACDs, your little VWAPs, your little fancy Fibonacci's over here, fucking mathematician looking ass fucker, right? You're not doing that. You're just literally looking at straight price action, right? It's literally telling you because it's more, there's more to the eye than there's more to it than just support resistance. Okay, there's more to it, right? I don't like how people are like, oh, so you're just using support and resistance. Do you even know what a support and what a resistance actually is? Can you give me a whole essay on what a resistance is? I can give you a whole essay on what a resistance is. A resistance is not just a resistance, right? I can literally tell you a whole paragraph on what a support and what a resistance is right now. So right here, right? Boom. You got 15 minutes. That's 15 minutes, right? 5 minute, 5 minute, 5 minute. What do you see when you look at this? In a 15-minute, when you're looking at this and it's been 15 minutes going on, you have buyers establishing a level, an area of value. You have the buyers, they're establishing an area of value here, right? Why is it that they established the area of value? Because it's tried to fucking break this for 15 whole minutes, right? 15 minutes it held. It kept holding, right? Can you say the same for here? Can you say the same thing for here? That buyers are holding this level now, right? From here, from 261 all the way to 263, that's a $2 move, right? How many dollars can Apple have a range in terms of the whole day? How many dollars do you think it moves on average? 100. Get the fuck up.
About $5.
Like 5, like more than 5 at least, right? Definitely more than 5. So by knowing from the start, from the jump, that Apple usually has a range of $5 a day, and it's only moved what, $3 from the low. Don't you think it's also a good probability trade for you to get into Apple? On top of everything else that you're about to look at right now, on top of volume, on top of pattern, on top of range, right? Now you have that additional conviction as to why you should get in, right? So now you see how they established the level of support here, right? Because what was this line before it became a support?
Resistance.
It was a resistance. Where was the resistance at? Here, 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 pre-market, right? So now that resistance became support. That's now the sellers are pushed out, and now the buyers are there, right? Boom. Does that make sense as to why Apple was a good trade today? What were the? Can you guys repeat? What were the determining factors as to why Apple was a good trade today, so that tomorrow, if you see the same setup, you can do the same thing and execute?
It was still within its range of the day that had more probability that it could go up
Exactly. And also it broke out of that what?
out of that range.
Out of that range, right? It was fucking trying so hard. Look, pre-market, literally crying here. Apple was literally crying like, mommy, fucking get me up there, right? Daddy was like, oh, no, son. We ain't going. You know what I mean? And the baby just, punched the dad, and now he just went straight up, right? Does that make sense to you guys? Hopefully that makes sense. Okay, and also when you guys are looking to like get into trades, I always look at other stocks that are within its what?
Within its sector.
Within its sector, right? Because usually same industries move. What did we close at today? Oh, I hope we gap up. I don't know. Well, we close around here. Here, we close here. So we're right at the. Well, right now, ES is right at the close. But today at around. Sorry, hold on. Let me see where ES was at when everything else was running today. $7.50 here, $7.50 here on Apple, $7.50 here on ES. ES was pushing up, Apple was pushing up. ES didn't even break out until it was fucking 820, right? This was crazy because was this when they announced that Bernie was I'm not sure if that was the time when they announced that Bernie was out. Thank goodness. All right. Does that make sense on that on the range and breakout? I mean on the range and volume?
Yeah, I got a question for you right quick.
What's up?
Do you think it's a good save if you just focus on one stock? Say if I just pick Apple, like it's only stock I ever trade, like ever. I just learn this range, like I just don't
dude,
trade ever nothing else.
I know someone who fucking trades SPX all day and just makes straight bank because he's been doing that for like 4 years. He just trades SPX. He says he knows it. Like, no. So that, and then I know someone else who trades Apple all day, says claims that he knows it like the back of his fucking hand. I mean, if he's making a lot of money on just that name, then, cool, right? You can do that too, right? I used to do that. I used to just trade SPX all the time. I used to just trade Facebook all the time. At one point, I was trying to trade fucking Amazon all the fucking time, every single day, until I lost that 40,000 in 2 days. I fucking stopped trading Amazon. I said, fuck you, Jeff Bezos. Rich fuck. Blamed it on him. Now let's go look at what else? I want to show you guys a bull flag or a triangle before I go to use the indicators. All right, you know what? I'm just gonna add the indicator on now, okay? Stochastics. What's up?
If we're like more of a beginner, do you think we should just focus on maybe like 1-2 stocks a day? You suggest focusing on that, or keep like searching around?
So it depends, okay? So when you guys are looking for stocks to trade, like we talked about yesterday, it depends on how much is in your account, how much it kind of what is it called? What's the word for it? How much it correlates with your with how much you should risk, right? Because if you have $1,000, it kind of if you have $1,000, right, you can either do one of fucking two things, right? You can either use risk management or you can just go balls in, right? So if you use good risk management, right, either 10, 15, or 20% of your overall of how much you have in your account, right? So what? So with 1,000 was 10%, fucking $100, and then 20% is $200. Same like if you have 10,000 in your account, 30,000. If you have 10,000, 10% is 1,000, 20% is 2,000, right? Now put that risk on, right? What should your stop loss be? 10%, 20%, right? The max you're gonna lose is not 2,000 if you have good risk management. It's not 1,000 if you have good risk management, right? If you use 1,000 and you have good risk management, the most you're gonna lose if you use a 10% stop loss, a 20% stop loss is what? $100 to $200. If you use 2,000 and you use a 10% stop loss, 20% stop loss, the most you're gonna lose is 200. Right? So going back to having $1,000 account, if you use $200 per trade, which is 20% of your account already, right? That's not the most you can lose, right? That's what people think. Oh, I'm using 200, so I can technically lose that. Well, if you're day trading and you have good risk management, no, right? If you use 20% fucking stop loss, the most you're gonna lose on one trade is what?
$40.
Exactly, right? It's not no 200, right? So accept that risk, but also use good risk management, and that's it. Now, when it comes to, hey, what stocks should I trade if I have $1,000 account? Well, you want to look at stocks that have cheap premiums, right? Sometimes it depends on where that stock is at right now or what stage it's at, right? If we're getting closer to earnings, do you think the premiums are gonna get the contracts are gonna be more expensive or cheaper as we get closer to earnings?
More expensive.
More expensive, right? Because everything's getting priced in and they're anticipating a certain percentage of move from that stock, right? So how about if it's just normal and earnings is like 3 months away, is just like it's just a normal stage, then everything else is going to be a little cheaper, right? So some stocks that I can tell you off the top of my head that have really good premiums in terms of how cheap it is and how much the stock can actually potentially move, especially right now during this time, probably like American Airlines, right? USO, that's US Oil. So American Airlines, USO, then you have Delta, the airline, right? Sometimes Boeing is cheap, sometimes Facebook is cheap, sometimes SPY is cheap, right? But you never want to, because you know how like in the different, like on social media, what are the stocks that you usually see people trade on social media?
Tesla, Amazon, Google.
Tesla, Amazon, fucking Google, right? Just those three names have really expensive premiums, right? A contract on fucking Tesla at the money is like $4,000, even if it expires fucking next week, right? And then Amazon is the same thing, just a little bit cheaper. I don't know why, but but these names make big moves. But when you see this shit a lot on social media, right? It's literally gonna. What happens is you see these names so much, you're gonna want to trade it. Why? Because of the moves that it makes, right? You see the people make profits with it. Oh, he made fucking $30,000 on Amazon today. I'm gonna try to do that with my $200 account. I'm just gonna put it all in there. Come on, Willis. $200 on Amazon is like going. You're gonna have to go like $100 out of the money, right? And it's not a for sure thing that stock is going to go up more than $70 to where you can actually make decent money, right? Does that make sense?
Yeah.
Right? You have to be realistic about what options you want to make, what you want to call, right? Because if, let's say, you get into a Facebook call and it's at 200, right? And you get into a call option that is $5 out of the money, so your strike price is 205, right? You won't really make good money until it hits 203, 204, 205-ish and above, right? To where you get in the money. Does that make sense?
Yeah.
Big Daddy says, damn, I just said Big Daddy. Okay, he said, why do you choose out of the money sometimes with your signals? So when I swing out, when I tell people to swing stuff, right? I have to think about the people in the group that have lower accounts too, because I don't want them to miss out on trades, right? And also going out of the money when you're swinging something a month away gives you that time for that premium to go in the money, right? Whereas if I just tell everybody, hey, go into in the money calls expiring a month away, if the stock price fucking drops like tomorrow or even going on to the next week, right? Your shit's gonna get killed because you're in the money, right? Does that make sense? I like to make it out of the money so that more people can afford it, but I also tell people, hey, go slightly out of the money, right? Because you don't want to go too out of the money, right? If let's say if I get into a call for Facebook that's at $200, and then I say, hey, go into a 202 strike price, which is $2, out of the money, which is kind of slightly out of the money, is it realistic for Facebook to go up $2 or even more than that within a week?
Oh yeah.
Yes, right? It makes sense. So that's a good trade because, first of all, we got the premiums pretty cheap because it was slightly out of the money, right? And all we needed for is to go up $2 and then more and then some, right? But obviously, if you get into an in the money call expiring next month and it goes up $2 the next day, yeah, you're gonna make a lot of money, but you have to be willing to accept that risk in the first place to go that deep in the money, right? Because some people don't like to risk a lot swinging, right? That's the whole point on why we swing, so that it's affordable. That's how this kid that I'm mentoring was able to go from 1,000 to fucking 100,000 now, right? Because he swung everything. I'm not saying that, you're gonna be like him growing that fucking account from 1,000 to 100 in like 2 months. I'm just saying that that's what swings can do. You know why? Because also, like, I'm gonna go over swing strategies tomorrow, but I mean not tomorrow, the next in 2 days or whatever. But the reason why I like swings is because if you're day trading something, right, and you only wanted to go up $3, but when you swing something, you're giving it time, right? You don't know what you're gonna catch after hours, pre-market. You don't know what you're gonna catch, right? Because a lot of stocks move like crazy when?
After hours.
Exactly. Pre-market after hours is what we've seen these stocks, have the most movements. So it's like, when you see this shit happens time and time and time again, why don't you take advantage of that and accept the risk of swinging because you've seen the reward? Does that make sense? Oh,
why
shit.
why do these stocks move at pre-market? Who's actually buying it? People
Institutions?
Institutions, okay.
Kevin, quick question about the options pricing. So at times when you see a volatile market, you see the spread going like pretty wide. So how do you decide to go in and pick the right strike price?
It depends. It depends on what stock you're looking at. What stock are you looking at that has fucking ridiculous spreads? I know Facebook, it never has that. Bank of America never, unless you're looking at like NOC, right? Northrop, like that those kinds of names. Like, I would stay away from fucking options that have too big of a spread because there's literally no point. So to solve that problem is to not trade it. Does that make sense?
Cool.
Because you can't change the spread on that stock, right? No matter how much you talk about, hey, should I get into this because it has a big spread? Well, what are you gonna do about it? It's either you get in or you don't. It's either you accept that spread is wide and you get in or you don't, right? Because talking about it isn't gonna change the fact that the spread is huge. It's not gonna. You're not gonna be able to change the spread, right? If you get into that trade, you can get fucked over because of the spread, right? And then when you sell that trade, you're going to sell it for less than what it says it's going to be sold at because of the spread. How much is a big spread on options? Okay, if the bid is at 50 and the ask is at 100, are you going to buy it? If the bid is 50 cents and the ask is $1, you're going to buy that? No. Why? Why are you not going to buy that? Bad Phil, you come in, you're fucking immediately down. Fucking, I remember one time where I fucked up, but I made a lot of money was when I bought SPX 0 day till expiration. On a Friday, I bought 20 contracts of SPX. I was immediately down 2,000 as soon as I got in the trade. But it went up like fucking $100 because you know how SPX moves a lot. So I fucking, the gamma just helped me like crazy. But I got lucky. I got super lucky with that. I got super lucky with that.
And I got a question. When you in a trade and it shows you how much current you up or down, is it showing how much you are? Is it based off the ask or is it based off the mid price? Or is it based off the bid? I don't hear nothing.
There's an option actually.
Kevin, you still there?
You guys hear me?
Yeah.
All right, yeah, my phone died. I didn't even know my phone died. I was like, what the hell? Okay. You guys know what indicator I'm talking about? And it's like a cheat code. Damn, you guys don't know, huh? Yeah, I'm about to show you. I better not see anybody start a fucking trading group just based on this indicator, because this is like a cheat code. Okay, look at this. Okay, I'm gonna break this down to you guys. And thank me later. So look at the stochastics. Okay, this is on a 5-minute chart. Wait until I show you what a 1 hour chart fucking looks like. So look, the red crosses above the purple. What happens? Okay, the red crosses below the purple. What happens? Goes down. Boom. Right? I only look at the crosses. Okay, listen to this. Listen to this part. It's a very important
Can
part.
anyone else hear anything?
Okay. Look at the crosses when the volume is high. When there is good volume, that's when you want to look at the crosses on the 5-minute chart. Okay. Let's look at 30 minutes.
Kevin, is that a fast stochastic or a slow?
Slow. Always look at the slow stochastics. Okay, what is the difference between an EMA and an SMA? The exponential moving average and the simple moving average. And no, I don't change anything on the stochastics. Everybody can hear me, right? So I don't know why people are saying no fucking audio. Okay. Why? You guys know the difference between EMA and SMA? EMA reacts faster to the price. Okay. That's a good thing about that, right? That's why I use EMA. But when it comes to stochastics, I use the slow because look at what it looks like if I put the fast on. Okay. You guys see the difference on why I'd rather use a slow? You guys see it? You guys see how it's fucking noisy as hell? Like it just fucking zigzags like a squirrel. But look, okay, that's why I use the slow. Okay, stochastic slow. Just look at the bottom again. Look at the bottom again and look at it when I change it. Okay, pay attention to the bottom. Boom, so much smoother, right? Now look at this. crosses up, crosses down. Boom. Okay. Now let me show you guys what this actually indicates. Okay. Let's go to the 1 day. Okay. So this stochastic, I'm gonna send you guys a video too that I studied. Okay, that I personally studied. All right. So the stochastics, can anyone guess what the stochastics actually determine? Take a guess.
Trend.
Momentum. Okay. Now you guys see how this looks like an RSI thing, right? How it has a top, the bottom. Okay. So this is how a lot of fucking YouTube videos will tell you what a stochastics is, but it's not. Okay, they'll tell you, just like how an RSI works, what is the top and what is the bottom. Someone guess? They'll tell you that, hey, this means that it's oversold, this means that it's overbought. No, that's not what that means. Now let me show you why. Okay. So look at this. This is a 1 day on SPY. Okay. This is a 1 day on SPY. If this meant that it's fucking oversold, overbought, right? If this meant that it's overbought, then why didn't the price go down if it's overbought? Right? So what does this really mean when it's above the blue line? What does this really mean right here? When we're talking about momentum, what does this actually mean? When it's above the blue line, that it's bullish, that it's just the momentum is so strong. That's what it means. Okay? That the momentum is strong, right? So when it's above this, this means the momentum is strong. That's why it keeps going. Now, when it starts to cross down, especially if it crosses the purple, then what happens? Like look where it crossed here. Look at this cross and look what happened here. It drops because the momentum decreased. Okay, this is a momentum indicator, right? This indicates momentum where it's supposed to be. Okay, does that make sense? Let me show you a better example, like on certain stocks.
So does that cross mean it's turning bearish?
If it crosses down, yes, it means that it's bearish. If it crosses up, it means that it's bullish. Let's look at. I love this indicator. This indicator. I use this indicator to tell me whether I should get into a trade or not most of the time.
You can change the colors, right?
Huh?
You can change the colors.
Yeah, you can change the colors if you want. Like, look, all you gotta do is click it, right click it, edit. You can make it, let's make it, what color should I make it?
Be green and red, don't it?
Green. This one says oversold, overbought. Green and then red. Okay. Then I'll make this white. Okay. That's like a fucking Christmas tree. But look. Okay. So what this is what here, let me show you guys what this composes of. Okay. So there's a slow D and a slow K. Now, I can't tell you the right definition of this because this is all mathematics. Like, let me show you guys online on the thing. Okay. Stochastics indicator explained. Look, this is the math for that. This is what the slow K and the slow D is. You guys want to do that math? This shit looks like something fucking Einstein could solve, not me. Not no Einstein. But
I'll
look,
pass.
that's what the K is, and that's what the D is. Okay. If you want to get it, if you want to really get down to the nitty gritty of what it actually is, that's how they found that out. Okay. That's shit. Just by looking at that, I can tell it's effective. There's a lot of thought put behind that indicator. But look, crosses up, up. Went down a little bit, down. Okay. It's not always going to be effective, but based on what you can see, like, can't you see that this is at least 70% effective? And look at this. This one, yes. So always look at this, okay? Write this down, please, so someone doesn't ask again. You always want to look at when K crosses D, okay? On the default setting, K is going to be what color? What color is slow K? Red. And then the D is the purple line, right? D is the purple, not the red. I just changed it to red. It was purple before this. Okay, slow K is red, slow D is purple. So when the red crosses the purple, either to the upside or to the downside, right, is when you want to kind of look to see if you should get in something. So this is the thing, okay? 1 day, 1 minute. No, I wouldn't use 1 day, 1 minute. There's just too much going on a 1 minute frame. But look, what if you see? What if you're looking at the 5 minute? What if you're looking? I'm not gonna go look for this, but what if you're looking at the 5 minute, right? And you see that the K is crossing the D. Plus, you see a lot of volume. Plus, it's a bull flag. Plus, it's a breakout of resistance. What does that mean? That means that it's going up, right? So when you have all these different fucking different convictions, what are you gonna do? Are you gonna fucking hesitate and go ask your friends in the chat room whether you should get in or not when you already see this yourself? No, right? You're gonna execute. You're gonna get in that trade, and then you're gonna post your little profits. Like, hey guys, got in this shit, fucking executed. Get at me, right? That's how you got to do it. Okay. Now, this is the best time frame, in my opinion, is when I look at swings. Okay. When I look at swings, I like to use the stochastics. Okay. I'm telling you, this is like a damn cheat code. Let me remove all this to show you. Okay, this is another thing. Okay, but before I explain that, here's another one. Okay, you guys already see how effective this is, right? You guys see how effective this indicator is? Like, it literally kind of tells you where it's gonna go. Does it not? Or am I just stupid? It's a really good indicator. Now, what about this right here? You see how when it goes down, you would think that it has bearish momentum, right? But when we were looking at SPY earlier, was the line that was above the overbought level, was it straight, or was it like this, where it went like this and like this? When it kept going up, when SPY kept going up, was the line like this or like this? Was it like this or like this? It was straight, meaning the momentum stays, right? It's in a straight line. When you look, when you see this right here, when it points down and then it starts pointing up, what does that tell you about the momentum?
It's changing, dropping.
Huh?
It's changing, dropping.
It's changing, right? It's gaining what kind of momentum now as it points back up.
Bullish.
Boom. It creates that bullish momentum, right? So that's also a good way to get into some trades, especially when you see something and it goes like this one right here. It points up and then points straight down. It means that that bullish momentum is losing its momentum, and now it's going into bearish momentum, right? So now we're in what? We're in more of a bullish momentum, right? On the weekly, on Roku, right? I'm hoping that it's just gonna keep going up to back to 176. We never know. You got, I mean, the fucking economy's trash right now, but the stock market is just going crazy, right? What are you guys gonna do when, if you're looking at Google and then tomorrow the green crosses above the red? I'm not saying get into position, but what should you be looking at for this to go? In what direction?
Up.
Up, right? Up, right? Especially, imagine if we close above this right here tomorrow, right? If it closes above this tomorrow, then this is gonna be a pretty good fucking month when it comes to calls, right? One last thing I'm gonna show you in terms of indicators.
What time frame you use? About 15 minutes?
Any time frame other than the 1 minute. Just play around with it, right? Just play around with it, practice it. Look at it, fucking, you know what I mean? You're not gonna understand it until you look at it and then you practice it yourself, right? I can tell you a million things about it, but if you don't want to do the research yourself and actually go to your chart like later on tonight and look at it and look at like different names during different times, like look at Apple last year, how the stochastics was, look at Facebook last year. That's how I got good at what I'm doing, like, because I would backtest everything. I'd literally go back 20 years and see how Apple reacted to this indicator. I'll see how it reacted 10 years ago. I'll see fucking 15 minutes ago, 20 minutes ago. Justin Lee said, thoughts on Ichimoku? I don't use that shit. First of all, is the price action, are these strategies that we're looking at right now, does this not work? This works, right? It does, it works. So why do you try to look for other things when you have a system that works? It doesn't make sense. It's like I don't know how to compare this. It's like you having a girlfriend who's a 10 and you're looking for more and you want something else. It's like you having a girlfriend that's a 10, you know, she's got all the qualities that you want in a woman, but you want something more. You want more than that. Variety is nice until you get caught and that your girl breaks up on you, and then the second girl you're looking at cheats on you. Now you're fucked. Now you have no girls, right? Well, look, damn, I forgot what I was gonna say. Oh yeah, another indicator that I use sometimes now. Bollinger Bands. Okay, Bollinger Bands. This is what a Bollinger Band is. Okay. When you have the Bollinger Band on, you want to keep all the settings. I just changed the color, right? There's a midline, lower band, upper band. I'm gonna give a video that I know that explains this good too. But look, okay, you guys see how there's a top band and there's a lower band, right? What is this? Is this the top band? Is this the mid band, or is this the lower band right here? Top. And what is this? What is this? Lower. And what is this right here? Middle. Boom. That's it. Lower, top, middle. Okay. What usually happens when you're looking at a higher time frame and you see that the price is literally breaking out of the band? What do you see happen? Even as it goes up, or even when it's down here? What usually happens? Yes, this is Bollinger Band. What usually happens when you see the price fall or go above the top or the low? It reverses, meaning it's over what? Over, it's a word for it.
Overextended.
Overextended. There you go. It's overextended. That's what this indicator tells you. When something is overextended, it uses 2 standard deviations. So it's 2 standard deviations up, 2 standard deviations down. Okay, that's what it uses. I used to look at swings like this, right? Now, what do you see usually happen when the price breaks above the mid band or breaks below the mid band? Breaks below the mid band? No, it follows it. Okay, it follows exactly like Big Daddy says. Fucking Big Daddy, but just like BD said, okay, it runs up. It continues to run up, right? If it breaks below the mid band, it should continue to go down to the lower band until it rejects. Or when it breaks above the mid band, it should, okay, it should, right? It should go up. Okay, that makes sense. I'm gonna.
But the mid band should be your indicator to go bullish or bearish on a put or a call.
A what?
So at the crossover at the mid band, is that when we're
You
looking
can
at
do
to
that
get a
too.
put or a call?
Yeah, you can do that too. Like if you see that the price is already rejecting from the downside and it's going back up, and then it breaks that middle band and it closes above the middle band, especially when you're looking at this weekly chart, isn't this a good indicator for you to swing calls, for example? Yes, right? But you also, just like how the stochastics is, right? You don't want to just rely on that one indicator to tell you what you should do. What should you do? You should have other, right? Other factors that align with where you want it to go, right? Align where you want it to go, and then you get in the trade, right? You don't just rely on this just one indicator to tell you. That's why, yeah, just like fucking meat popsicle. Meat popsicle?
Hey
Okay.
Kevin, quick question. What about when it starts to ride up like on the upper band, like
Like
there?
this? Like
Yeah.
this? So
Yeah. How would you know?
okay. This is a good question. So why did this go down right here? Why this one right here? Why did this go down? Other than the fact that it's at the top of the band, why did it go down? What did it show you? What candlestick pattern is that? These two patterns.
Bearish. Reversal.
Bearish engulfing, right? Bearish engulfing, so it went down. Okay. Now, why did it go down more here? What did this show you?
A bear flag.
A bear flag. Right? That's a bear flag. Let me change the color on this. How did you learn candle patterns? Did you guys see the fucking did you guys see the homework that I posted 2 days ago? I posted like 3 different candlestick videos. One was like an hour long. Literally, I'm gonna link a book with you guys. It's called the Candlestick Bible. Just read it. Right? Read it and just fucking get your mind blown. Right? Well, look. Okay? Now, when this went down here, okay? And then you're looking at this example. I'm still answering whoever asked me. But look, this first green candle, what did it show you based on this long wick right here?
Selling pressure.
There's selling pressure, right? So when you're looking at this indicator and you're seeing that there's selling pressure, you should not, right? What I would do is I would get out of my swings, because think about it. We're looking at a weekly chart, remember, right? So I should be thinking, all right, fuck, this thing might not keep going next week, right? So I should get out and wait till there's a confirmation that this is gonna go down. Now, which one of these next candles is a good confirmation on whether you should go puts?
That last one.
The last one, right? Because that last one has that long wick at the top, right? And it's a red candle. It's an inverted hammer.
What time
Or
frame is
shooting
that?
star, or a shooting star. Okay. Now, does that answer your question? Like, for example, here's another one. Right? Here's another one. When it went to the bottom, it fucking showed what kind of candle here? A hammer, little doji hammer looking stick, right? Shit's telling you that there's a lot of buying pressure at this level, right? Now, if you were to take off, right? If you were to take off the Bollinger Bands right now, would you not see that this level is a support? When did it ever fully break below a full candle below? Never. This is not a full candle below. This is not a full candle below. This is not a full candle below. So this should kind of tell you like, hey, you're at a support level. So, if you don't want to just look at the Bollinger Bands, or even if you didn't have the Bollinger Bands on there, you would know that this is a fucking support level. Does that make sense? Yeah. So I'm going to end the class here for today. Hope you guys learned. Fuck, that shit was 2 hours again already. Man.
Before you go, what time frame is that right there?
3-year weekly.
Thanks.
Yeah. So I'm gonna post more videos today in terms of like homework and stuff. But yeah, I hope you guys learned a few things or two.
Thank you, Kevin.
Yeah, of course, guys.
Kevin, real quick before you leave, the guy that was asking the question right beforehand, he was asking why it was riding up from September to March and what that indicated for him.
Wait, what?
The last guy that asked the question, he was trying to find out what it meant from September all the way to February when it was riding that top of that line.
Oh, this right here. Well, look, this was just we just had a bull market that happened right there, right? That's a straight up bull market. You know how many weeks that is? You guys remember this bull market that we had when we thought that this was a few months ago. We were like, oh, we thought that fucking that SPY or the whole market was gonna break, but it never broke because of the everything that was happening in our economy, right? So when it comes to that, it's like no indicator is gonna tell you whether the bull market is gonna keep running. But none of these candles literally was telling you that this price was going to reverse. Does that make sense?
Yeah, so it was just kind of riding that market or riding that bullish area for a minute. It just wasn't indicating anything else.
Just like it did here, right? Just like it did here. It was riding up like crazy, and it did it here. It wasn't until the last candle that had a bearish sentiment on there where it just plummeted. Does that make sense?
Yeah, I got you.
Yeah.
Thanks, sir.
Guys.
Hey, Kevin, one more question. Is that better
Thank you.
than using a VWAP?
Huh?
That Bollinger Band, is this better than using a VWAP?
I don't like using the VWAP. I mean, you can use a VWAP too, but I would just stick to the bands. But if you like the VWAP, just use a VWAP.
All right, got it.
It's like personal preference. I can't tell you what you should like because something can work for you that doesn't work for me. Okay?
Yes, sir. Got it.
Thanks, Kevin.
No problem, guys.
Have a good night, Kev.
Kev, quick question before you go.